Good morning. This is Josh Hayes with Hedge Plus, and here's today's market monitor. Well, another couple shoes fell into place yesterday, things that we were anticipating for a long time, and finally arrived with the USDA supply and demand report yesterday. Everyone in this business, I think, was expecting uh, corn ending stocks to be tightened based on the export demand pace we've seen. The USDA, probably held off maybe a month longer than it needed to because of the fact that there was fear about tariffs, but our exports just never slowed down, especially with corn. And so, with the cut to projected ending stocks, we have fundamentals that really should bring us to be in a much higher place with corn. It's going to still take a little bit of time, and there's still some caution as these trade negotiations drag on, and also the anticipation of a huge crop. But it should definitely help old crop immediately. And then overnight, the U.S. dollar dropped to a 3-year low. Overall, that's a negative for the economy, but that's a positive for the grain markets and exports. I do think this was something that the Trump administration anticipated. It's probably something they're comfortable with for a while. And it's kind of one of those situations that takes care of itself over time. But for the near term, it's positive, makes our exports that much more attractive. Also, overnight, China once again retaliated and raised their tariff on U.S. goods to 125%. At the same time, maybe a little bit of a blink, they declared they would raise it no more, regardless of what the U.S. does. So if the U.S. raises ours again, which I kind of almost expect at this point, maybe one last time, it just seems like maybe Trump's personality and who knows? Yeah, I know he wants to strike a deal. It's not about having a 125% tariff on China forever. I know that. So, but at least China did declare that they would. This was their last retaliation. They have signaled they want to make a deal. That's been apparent here for the last few days, in spite of the tit for tat back and forth. And then with wheat, that was probably the one downside, the one weakness in the USDA report yesterday. Wheat, especially U.S. exports and demand for U.S. wheat was extremely poor and raised U.S. ending stocks to the degree that global ending stocks were raised slightly, but it was really on the back of how poor the situation was with U.S. wheat. So, in spite of that, we're actually up overnight across the board, and we just maybe perhaps the dollar dropping will finally kickstart U.S. wheat exports and start to move that in the right direction. Taking a look at the weather, again, it's the U.S. closely followed by China in terms of severity of weather issues. Our rain and flooding is past. We still got the aftermath of that to deal with in the eastern Corn Belt. And the Western Corn Belt, it's going to be too hot and too dry. So I saw a weather person mention a phrase yesterday. We're in a 2-2 pattern, and it's essentially too wet in the east and too dry in the west. And to go along with this dryness, we're now going to get some extreme heat from about southwestern Kansas all the way down to Texas. They're looking at temperatures in the 90s, and even some places isolated it could get over 100 degrees in southern Texas. So unseasonably warm after it's been dry. That's only going to dry things out further. One areas or a few areas that might benefit are the northern grain growing sections of the United States, northern plains, Midwest have had enough moisture, and these temperatures improving there means getting up in the 50s and 60s, and actually should make some pretty good conditions to get planting going. But I'd say on the whole, the heat and dryness in the southern plains, and then the aftermath of the flooding we had in the east puts things in not a positive situation on the whole. Well, Australia to the east has got good conditions for wheat planting. In the west, they still are too dry. It's dry enough to get wheat production going in Ukraine, but they could still use some more rain. But they've gotten a decent amount here recently to take that concern off their radar. And again, China still too dry. It's been too dry there for a while. There's no indication of rain in sight, so that's becoming a real problem for them. They're going to have to export more than they want, and they're already in a bad situation. So that's something worth watching. And here are the prices overnight. As of 5:04 Central, up across the board. Just a couple cents in corn, nearly a couple cents in beans, but nice to see wheat with a little bit of rebound, up near 10 cents, 9.5. Relative to this time yesterday, corn's up about 9 from 24 hours ago. Soybeans are up about 10 from 24 hours ago. And wheat even is up about 2 cents from 24 hours ago. So we have pretty much gotten to this point each day, following overnight trade, getting ready for the day all week. We're trending in the right direction. And it's because the fear of the tariff wars and that fight appears to be behind us. Obviously, the only thing that remains at the moment is with China, but the market has finally understood that with every other country now under a reasonable tariff level, if China doesn't buy from us but has to buy everything from Brazil until Brazil runs out, it's going to bring other countries to the United States. And that's why soybeans are able to have the recovery they have and just the general recovery we're seeing overall. That'll be it for today. Have a great day, everyone. And then I'll talk to you again next week. So have a great weekend. Thanks.